Hi, my name is Colleen McFerrin at Compass, and my team is Four Bridges Group. Today, I want to talk about four things. Number one, what's going on with the fall market in the San Francisco Bay Area? Number two, how does this compare to 2008 crash? Number three, what can you expect as a seller? And number four, is it a good time to buy? First, let's talk about the market. The good news is things seem to have stabilized in most cases. We can make predictions again on where things might sell because there are actually comparables to look at in the last 30 to 45 days. We can't, however, look at comps that are over about 45 days. This predictability is actually providing a lot of confidence on all sides of the transaction. I find that people do not do well in times of uncertainty, but they can deal with bad news as long as it's predictable. So, how does this compare to 2008? 2008 was a crash that was fueled by subprime lending, meaning banks lending to borrowers with less than good credit. People bought homes that they could not afford, many with zero or very low down payments. And when the market crashed, many were forced to sell due to the value of their homes being worth less than what they owned on the property. This caused a very high mortgage delinquency rate. There was also a 50% crash in the stock market, and right now we have an approximate 20% decline, which is not nothing, but we hardly are seeing any delinquency rates. Also, there was very low unemployment at that time. So based on these charts, median prices are even with Q1 2021. So we did lose that big bump in appreciation that we saw in the spring of 2022. Currently, most homeowners hold their mortgage at historically low interest rates. Post-2008 lending became a lot stricter in the Bay Area. Most people have a loan that has 20, 30, even 40% down payment. And also, there are a lot of cash buyers as well. There is not a surge of desperate sellers. Many sellers do want a certain price for their home, and if they don't get that price, they'll rent. This may create some upward pressure on sales prices with homes coming off the market. If you're a seller looking to recoup what you paid in the last few years, including fees like staging and commission, it probably is not going to happen. That being said, if you do want to make a move, ask yourself, where do I want to be and why do I want to be there? And does it make sense for you to wait? The answer for most sellers is no. For buyers, there is tremendous opportunity. As is typical for this time of year, this is the highest amount of inventory that we've seen in an entire year. The number of listings going into contract is down by about 27%, and prices are lower than they have been for a very long time. If you're waiting for the bottom, more than likely you're going to miss it. Timing the market is impossible, so buy when you know it's soft, which is right now. We've sold a lot of homes to buyers in the last few months, and all of them have gotten tremendous deals. Yes, interest rates are higher, but I would venture to guess that they will go down, and there are creative things you can do with loans that we're happy to discuss with you that will allow you to have a lower payment for now, and you can refinance when rates go down. Inventory is going to fall off the cliff in November, and there will not be much to choose from. So if you want to buy in the next 6 months, then getting serious now and taking advantage of this inventory is critical. The biggest opportunities right now are in condos. Q3 condo prices are currently around 2018 prices, but as referenced by this chart, the Q3 rate is typically lower than other quarters, followed by a really strong Q4. So it's hard to know if these prices will stay there. For more information, questions, market updates, reach out to any of us at fourbridgesre.com. We'd love to help you, brainstorm with you, put a strategy together for you, and be a resource for you. Thank you so much for watching our video.